So it's a great moment again. We are going to talk about a certain topic in the advanced financial reporting paper. So this topic is concerning impairment of non-current assets. So this is so we talk about impairment of non-current assets, impairment of non-current assets. So you can talk even impairment of that is assets. So that is according to International Accounting Standards 36. So that is all about impairment of assets. So that is International Accounting Standards 36. So we say that impairment is the loss in value of an intangible and non-current assets. Like now, when I would be doing goodwill under consolidation or group accounting, I would be mentioning about this impairment. So which impairment we have said is all about loss in value of intangible or non-current assets. So let us check on some notes which are already prepared for you guys so that we can be able to understand this topic in depth. So these are about the topic. So impairment of non-current assets, or we can say just assets. So that's why I've said impairment is the loss in value of intangibles and non-current assets. So loss in value, when something loses value, like now intangible or some non-current assets, we say that it has been impaired. But we have another things concerning depreciation, remember that, and amortization. So you need to differentiate impairment, amortization, and depreciation. So International Accounting Standards 36 defines impairment as the loss, impairment loss, sorry. International Accounting Standard 36 defines impairment loss as the difference between carrying amount of an asset and recoverable amount. So the difference between carrying amount of an asset and the recoverable amount. So this is the recoverable amount, not the receivable amount. So the recoverable amount. So we have said that this is all about recoverable amount. So that way. So we say that it's all about the difference between the carrying amount of an asset and its recoverable amount. So that is why you can say that impairment loss is equals to carrying amount minus the recoverable amount. So how do you get the carrying amount? You know already. Carrying amount is equals to cost minus accumulated depreciation. These are the things we have been again, like now carrying amount, this we are done with that under the topic of accounting for income taxes. So you know what is a carrying amount? Cost minus accumulated depreciation. Then what about this recoverable amount? So recoverable amount, we always determine the fair value minus cost to sell or value in use. So fair value minus cost to sell or value in use, whichever out of the two. So let's say you have done the first one, fair value minus the cost to sell. And you have done your computation for value in use. So you have done the first computation there, and you have done your computation for the value in use. So the figure you get for the first one and the figure you get for the second one. So whichever is higher between the two is what we call recoverable amount. So that is the figure you pick. So how do you talk about this fair value, less cost to sell? So it refers to amount obtainable from sale of an asset, less disposal cost. Fair value less cost to sell. So the amount you obtain from the sale of a certain asset after you have deducted the disposal cost. So right now, legal fees and transportation. Then value in use, the value in use. These are expected future cash inflows from the asset, discounted to the present values. It's all about the expected future cash inflows from the asset, discounted to the present values. You know to discount from financial management.
Yes.
Yes, I think the cash flows you might have, they might be lump sum cash flows or
Annuity.
annuity. So you have to know the two methods of discounting. So you discount expected future cash inflows from the asset to the present. So you need to know that. You have to remember now, recall the methods from a firm, that is financial management, on how to discount. So that one maybe was theory, reference June 2013 question 3 and the June 2012 question 5. That is not computational but theory. Then another terminology, carrying amount, refers to the amount which an asset is recognized in the statement of financial position. So that is, we have already said it's all about cost minus accumulated depreciation. That is why they say that after deducting accumulated depreciation from the cost of the asset. Then we have another thing which is known as CGU, cash generating unit. So this is the smallest identifiable group of assets. This is the smallest identifiable group of assets that generates cash inflows independently from the assets. So these are about the smallest identifiable group of assets that generate cash inflows independently from other assets or a group of assets. So we have an illustration. So we have an illustration here on how to determine these things. So we have, for example, now XYC Limited has 3 cash generating units. So it has 3. So we have seen that XYC has 3 cash generating units, A, B, and C. A, B, and C. They are provided the following information. So you are provided with the cash generating unit A and the CGUB. So this is CGUA, and you have CGUB and the CGUC. So you are given the carrying amount, you are given net realizable value, and you are given that is a value in use. So I can write this. So that is it. So carrying amounts 300, 200, and 600. Net realizable value to 50 to 20 for 50. Value in use to 60, 190, and 400. So you are told to do recoverable amount of each CGU, that is cash and net unit, and the impairment loss, if any. So what we are supposed to do here is all about to determine the recoverable amount. It's a very simple thing. So how are you supposed to determine this recoverable amount? So remember that the recoverable amount, we say it's equals to what? Recoverable amount, we have already said it's equals to their value. So the first thing you are supposed to do is the recoverable amount according to that illustration. That is a very small illustration. So recoverable amount. So we have said in order to determine this, you have to do the fair value, you minus, that is less cost to sell. Or you have to do value in use. So whichever is higher between the two, whichever is higher. And you know that fair value less cost to sell is the amount obtainable from the sale of an asset, less disposal cost. Then value in use, these are expected future cash inflows from the asset discounted to the present values. Discounted to the present values. So which means that for the question, that is CQ1, CQ2, and CQ3. So I will write here. So CQA, we have CQB. So we have CQA, CGUB, and cash generating unit C. That is what it means. So we have to determine the first one, the fair value less cost to sell, which is the amount obtainable from the sale of an asset after you have subtracted the disposal cost. So it's the same as the net realizable value. So this one, the first one, is the same as net realizable value, because net realizable value is the amount you obtain from the sale of an asset after you have subtracted the disposal cost. Then the second one, I have to check value in use. So that was the trick of this question. They gave you the net realizable value. So you could have known that the net realizable value is the same as this net realizable value is the same as the fair value less cost to sell, because you know the definition of that fair value less cost to sell. So 250 to 20 and 450. 250 to 20. So we have 250 to 20 and 450. Then for fair value, that is for value in use. For value in use, it was direct. For the value in use, 260, 190, 400. 260, 190, 400. 260, 190, 400. 260, 190, 400. So now, in order to get your answer, the recoverable amount, remember that you go with the higher of the two. Like now for the first one, I can be able to see that my recoverable amount here, the higher of the two is 260. For CGUB, the higher of the two is 220. Then for CGUC, the higher of the two is 450. And that is how you are supposed to get the recoverable amount. Then again, another requirement was all about impairment loss, if any. So they were in need of impairment loss, if any. So that is all about impairment loss, if any. So for the impairment loss, remember that you would take the carrying amount. You will take the carrying amount. You have to raise the recoverable amount. You have to raise the recoverable amount. So let us do that. So again, I will write here CGUA, CGUB, and the CGUC. So CGUA, B, and C. So I have to look for the carrying amount, and I have to look for the recoverable amount. So I've written in short, carrying amount and recoverable amount. So for the recoverable amount, already I have it, 260. I have to raise 220 and 450. You see, I'm picking from this scenario. Then what about the carrying amount? So the carrying amount from the question, so the carrying amount is 300, 200, and 600. 300, 200, 600. 300, 200, and 600. So we're going to be able to say that the answers for this question is, the first one is 40. Second one,
Yes.
this is nil.
Negative.
This is nil. Eh?
Okay. Yeah.
So if the carrying amount is less than the recoverable amount, there is no impairment loss.
Yeah.
So that is nil. You cannot have a negative impairment. So if the carrying amount is less than the recoverable amount, there is no impairment loss. That is why I'm writing nil. And the last one is 150.
Okay.
So we are done with that example. So we can continue here. So we can talk about factors to consider when determining impairment. So we have the external factors, like now the unexpected decrease in the market value due to passage of time. So what are the factors to consider when determining impairment? When to say that there is a loss in value of these intangible assets and non-current assets. So we have some external factors, right? If there's a decrease in the market value, unexpected, that is, decrease in the market value due to the passage of time. Then we have increase in the market interest rates regarding or in relation to the assets. So if there was an increase in market interest rate, adverse changes, things like technological advancement or legal environment, carrying amount of the net assets of an entity. Then we have internal factors like evidence of obsoleteness or physical damage, an asset becoming of no use, that is obsoleteness or physical damage, reduction in the usage of an asset by an entity, and we have things like reduction in the level of output expected from the asset. So for you to understand again more about this scenario of recoverable amounts and impairment losses. So let us do again another illustration for December 208, question 2. So December 208, question 2. So it says that ABC Limited owns a manufacturing plant with a carrying value of 7,490,000. The government has just imposed the export quotas on products manufactured by the plant. So we have said the government has just imposed export quotas on the products manufactured by the plant. Following this development, ABC Limited has prepared the following estimates of cash flows from the usage of the plant over the next 5 years. So we have the year and we have the cash flows. So 23, 21, 10, 15, 70, 10, 40, and 23, 30. So we have the additional information. So the plant could be sold currently for shillings 5.6 million. The selling cost could amount to 100,000. So cost of capital is 15%. The present value factors you are given. But you know that you can determine this. The present value factors, it can be determined. So you are required to do the recoverable amount and you have to do the impairment loss. And this is for a single asset. So this is not for multiple assets, but this is for single asset. So again, I will be doing a question whereby we have multiple assets, because now here in this question, it was just a plant. ABC owns a manufacturing plant. It's just one asset. So you will find that in a scenario, once I will be moving to other parts, you will find that there's a question I will do concerning multiple assets, including goodwill. So multiple assets, including goodwill. So how will you allocate impairment to those multiple assets? So that one will be done later. So for now, let us do this question for single asset, of which we need to determine the recoverable amount and impairment loss, if any, on the plan. If any, on the plan. So our first requirement was concerning recoverable amount. So we say that the recoverable amount we always take the fair value so we say minus cost to sell. Cost to sell, and we have to determine value in use. So between the two, whichever is higher. So H means whichever is higher between the two. So I will start with the determination of fair value less cost to sell. So remember, the fair value less cost to sell is all about, we said, amount obtainable from this disposal of an asset after you have subtracted the disposal cost. Like now, this manufacturing plant, its fair value was its fair value was given here. So you can see that because the fair value is all about the market value or the price at which an asset can be sold currently. Like now, let's say this camera of mine I'm using, let's say currently in the market it can be sold at 40,000. So that is the fair value of that camera. So they say that under additional information, the plant could be sold currently at 5.6. So that is the fair value. But what about the selling cost? Could amount to 100,000. And remember that we said in order to get the fair value less cost to sell, it's all about the amount obtainable from the sale of an asset after you have deducted the disposal cost. So they can sell the asset at 5.6, but the disposal cost, the selling cost is 100,000. So we have to take 5.6 minus 100,000. So 5.6 minus 100,000. So which means that this is 55. Then after that, we have to talk about the value in use. So for the value in use, remember that we said this one concerns the discounting of the relevant future cash inflows. So these are the expected future cash inflows from the asset discounted to the present values, discounted to the present value. So I will talk about the year. I will talk about my cash flows. Then I will talk about the discount factor, present value discount factor. So anyway, I will talk about the discount factor. So I have written in short. Then we have discounted cash flows. I talk about the discounted cash flows. So for the year, we have 5 years. 1, 2, 3, 4, 5. So this is where I'm getting the cash flows. They were given direct from the question. But now here you are given 2 cash flows. For at 15% and at 10.5. Which one is applicable?
15%.
Because
Your given cost of capital is 15%.
yes, the cost of capital is 15%. So which means that for you to, so the cash flows you are given is the one, it's not 2 cash flows, but 1. What I was mentioning is that the one you are given for the 2 is all about the discounting factors for 15% and 10.5. So for the cash flows, they are direct, 2,300. So 2,300, we have 2110. So that one you will record. Then 1570, 1040, and the 2330. So remember that for the column of the discounting factors, so this one use 15%. So remember you can get these, It's not a must that the examiner could have provided the discounting factors.
Yes.
So which formula are you supposed to use?
1 plus R power n.
Yes, power negative n.
Yeah.
So if you could have applied that, you get. So 1 is a constant, R is the rate, n is the time. So since it's given, let us just record what is provided in the question. So for that one, we will copy the column of 15%, that is 0.8. So 0.8696, 0.7516, then 0.6575. We have 0.5718.
6570.
So then 0.4972. So confirm the third one. 1 plus R, 0.15 raised to -3. It's supposed to be 75.
6575.
So this is 5.
Yes.
6575.
Yeah.
This is what I think. This is what you are getting.
Yes.
I multiply 2300 times 0.8696.
I'm getting 2000.
The first one is 2000. The second one,
1595.
1595.
Mm, 1032.
1032.
595.
595. Then the last one,
1158.
So you add
6380.
6380.
Yes.
Aye. So that we can say that now the recoverable amount will be what? So remember that we have the fair value cost to 0.55, and we have the other answer for the value in use of 6380. So we go with the higher of the two. So the higher of the two is 6380. So that is the recoverable amount. So what about the impairment? So for the impairment loss, so what you are supposed to do here is concerning, you see carrying amount, you minus with the recoverable amount. You take the carrying amount minus the recoverable amount. So for the carrying amount for the question, so if you go up there, they say ABC owns manufacturing plant with a carrying amount of 7.4. That is 74.90. The recoverable amount we have is 63.80. So which means that the impairment loss is
1,110.
1,110. So we are done with that one. So let us check again on how to do for multiple assets. So we have impairment loss for multiple assets. So the main concern is on how to allocate impairment loss to each asset in the cash generating unit. So when you have multiple assets, how are you going to allocate that impairment loss to each asset in the cash generating unit? And another one is on how to allocate impairment loss on assets with goodwill. So because now I've said it's all about multiple assets. So how are you going to allocate so this impairment loss to each asset in the cash generating unit on how to allocate impairment loss on assets with goodwill? So impairment loss, that is all about in a cash generating unit. So impairment loss arises in a cash generating unit with multiple assets. So if impairment loss arises in cash generating unit with multiple assets, then impairment loss will be allocated as follows. So if it occurs, so this is not a must that we could have written this title here. So impairment loss, if impairment losses arises in cash generating unit with multiple assets, then impairment loss will be allocated as follows. So we have said, remember that it concerns now multiple assets and including goodwill. So if there is goodwill, goodwill should be impaired in full. Then to the remaining assets on pro rata basis. On pro rata basis. So this is A. On pro rata basis based on their carrying amount. So let us check December 2009. That question. So they say the following information is provided relating to the carrying amounts of the assets comprising the cash generating units of Arexo Limited as of 31st December 2012. So you are given two CGUs, cash generating number 1 and cash generating number 2. So you can see it contains goodwill. It contains tangible fixed assets. These are about fixed assets, not fixed, but fixed. So tangible fixed assets, and we have inventories. So that is what you are given, the three assets. So these multiple assets, goodwill, tangible fixed assets, and the inventories. So we need to determine how impairment should be allocated to these three assets. So the accountant of Arexo has prepared the following cash forecast relating to the business operations of the two cash generating units. So you can see the figures, the cash flows. Then you are told that the net realizable value of the assets of CGU1 is 50 million, and that of CGU2 is 70 million. So I said net realizable value is the same as what?
Cost to sell.
Yes. Fair value less cost to sell. So that answer, because now the definition of fair value less cost to sell is all about the amount obtainable after you have subtracted the disposal cost. So it's the same as the amount you realize after you have deducted the disposal cost. So fair value less cost to sell is the same as the net realizable value. The discount rate appropriate to the activity of CGU1 is 10%, and that of CGU2 is 12%. So you are required to do recoverable amount of the two CGUs, impairment loss, and allocate the impairment loss, if any, between the assets of CGU1 and CGU2. So let us do this one in the next around 30 minutes maximum. So let us start with the recoverable amount. And you know that in order to get the recoverable amount, you have to talk about the fair value, of which you have to minus the cost to sell. Or you have to determine the value in use. So after determining that, you have to use the higher of the two. So H, this is higher of the two. So let us start with the even value in use. So you can start even value in use, because the other one is just simple. So you have the year, you have the cash flows. CF means cash flow. We have the discounted cash flows. So before I talk about discounted cash flow, so these are about the year, the cash flows, discounted factor. So let's talk about discounted factor. Then lastly, I have to talk about discounted cash flows. So discounting factor for, remember that I'm doing the value in use for CGU1. So the years we have is 1 to 6. So the cash flows, they are given direct. $8 million, $6 million, $9 million. So 8 million, 6 million, 9 million. That one is, you need to record them under the first column. 10 million, 11 million, and 12. So record them. Then discounted factors. Discounted factors, I think it was at what? So the cost of capital is at what percentage? So for the discount rate, this one, the discount rate appropriate to activity CG1 is 10%. So the first one is 10%. So this one is at 10%. So apply the formula 1 plus R So 1 plus R raised to N. That is how you are supposed to get this. So remember that you can input your calculator, then you will be just changing some few items. Remember the first one is 0.9091. The second one, So I will be changing just the last one. So the second one, 0.8264. Then the third one, 0.7513. Then I have 0.6830.
830.
Then 0.6209.
09.
The last one is 0.564445.
45. 5.
So multiply your answers.
72, 73. 49, 58.
4958.
Yes. 67, 62. 68, 30. 68, 30 again. 67, 74.
6774.
Yes.
So add
39, 427.
so 39,427.
Yes.
So that is fine. So which means that my recoverable amount will be, so because here for the fair value, you raise cost to sell, so which is the same as net realizable value was given. So for the net realizable value for the first CGU, so then net realizable value assets of CGU1 is 50 million, and the total of the assets of CGU2 is all about 70 million. So which means that this is 50 million. So I would write in thousand. So this is 50,000. Then we have value news. We have 39,427. So whichever is higher between the two. So 50,000. So we can finish with the impairment loss for the first cash generating unit, so that once we move to the second one, we'll be moving. So impairment loss is equals to carrying amount minus
Recoverable amount.
So the carrying amount for the first cash generating unit.
And maybe the question.
So the carrying amount, you pick the values of the assets. So the following information is provided relating to the carrying amount of the assets, comprising the cash and net units of Arexo Limited. So the total of the two. So CG1 For 118, eh? 18 million. 18 million, eh?
Yes.
It's 18. It cannot be 18. This is wrong. That is 48. Because 26 plus 22, that is 48.
48.
So that is 48. So 48 minus 50. So which means that this is nil. There is no impairment for the first one.
Yeah.
If the carrying amount is less than, that is, if the carrying amount is less than the
Recoverable
amount. Now let us do for the second one. So let us do now CGU2. So let us do the same. I'm using the same format. So value in use. So CGU2. So we have the year. We have the cash flows. Talk about discount factors. So then we have discounted cash flows. So 1, 2, 3, 4, 5, 6. So these are the cash flows: 20, 22, 27, 24, 20, 22, 27. So 20,000. We have 22,000. So I'm reducing to thousands.
Yes.
So we have 27,000. Then we have 24,000. We have 15,000. And we have 30,000. So the discount rate, the cost of capital, is 12%. So that is 12%.
Yes.
So remember that these are all about lump sum cash flows, and that is why we always use the formula of 1 plus R raised to N. So they are not annuity. Annuity is the one which are the same throughout the year,
Yes.
throughout the financial years. So apply the formula 1 plus R raised to N. 1 plus R. R is now at the rate of 12%.
$0.8929.
0.8929.
0.7972.
0.79.
72.
For the third one,
0.7118.
the fourth one,
0.6355.
the fifth,
0.5674.
and the last one,
0.5066.
5066. So you multiply and give the answers.
17,858.
17,858.
Mm, 17,538.
17,538.
19,219.
19,219. Eh?
Yes. 15,252.
15, 252.
Yes. $85.11. $15,198.
15,198.
Yes.
All right, give me the total.
I'm getting 93,576.
93,576. So 93,576. So the next thing you have to do now is not about to determine that recoverable amount. So fair average cost to sell was fair average cost to sell, which I said is the same as net realizable value, because these are about amount obtainable from the sale of an asset after you have subtracted the disposal cost. It's the same as the net realizable value, which is given for CTU2. It was 70. So net realizable value of assets of CTU1 is 50 million, and that of assets of CTU2 is 70 million. So we have to pick 70,000 in terms of thousands. Then you can see here our value in use, the one we have already computed. So the value in use is 93,576. So the higher of the two,
93,576.
93,576. So that our impairment loss will be, so remember that we say that it's not about carrying amount
Carrying
minus
amount minus recoverable amount.
So the carrying amount of the assets of a CGU2 . So the carrying amount of those assets of CGU2, you give the total, because they say the following information is provided relating to the carrying amount of the assets comprising cash and netting units of RX or limited. So the cash and netting units, so the total value is 155. So 155,000 minus 93,576. So that is
61,424.
61,424. So what was required in this question is what we have been computing.
Yes.
So recoverable amount, we are done with that, CT1 and CT2. Impairment loss, if any, CT1 and CT2, we are done with that. So allocate the impairment loss, if any, between the CT1 and CT2. So which means that the only impairment loss we have to allocate is the for CT2, is the one for CT2. Because for CT1, there was no impairment. So let us do the allocation. Allocate impairment loss, if any. So if any, under any, it was a CTU2. So statement of impairment allocation. Statement of impairment, allocation. So that is for CGU2. So we have the assets. Remember that we have multiple assets. We have the carrying amount. And we have now this impairment loss is the one which we need to allocate. The impairment loss is the one which I'm allocating. So we have the goodwill. We have tangible fixed assets. And we have inventory. I think these are the assets, which were there in the question. So those were the assets which were present. Those are, we call them multiple. They are not one, but three. So the three. So the first one being 25,000. Remember that we are allocating for CQ2 because it's the one which has an impairment loss. So we have 25, 107, and the 23. 25. So I'm reducing 2,000, 25,000, 107, and 23. So the total is, it was 155,000. So the relevant impairment loss which I'm going to allocate is this one, the 61,424. So 61,424 is the one which is going to be allocated. So we said that when you are dealing with multiple assets, including goodwill, so when you are allocating, you follow a certain criteria. So that criteria was given here. So if impairment loss arises in CGUs with multiple assets, then impairment loss will be allocated as follows. So goodwill to be impaired in full, to remaining assets on pro rata basis based on their carrying amounts. So goodwill to be impaired in full. So here is 25,000 because it was 25. Then to the remaining ones on pro rata basis, which means that for tangible fixed assets, I will take it was 107.
Yes.
Remember that after allocating now 25, the remaining one is, the total was 155 for the assets.
Yes.
Minus 25 because we have impaired goodwill in full. So 155 minus 25, 130. Then you multiply with the remaining one. 61,424 minus the 25,000. 61,424.
36,424.
36.
424.
424. So the answer there is
$29,970. 98.
29.
98.
980. So the remaining one here, you can even take the difference. So the remaining one there is
6,444. 6,444.
and that is how you were supposed to allocate. So, and that is the end of that question. And that is the end of that question, which again marks the end of that topic.
So what if
What if?
I have a question.
Yes.
What if we had the impairment in both both units. So like CG1 and CG2, we had impairment loss. So we do the same. We allocate separately also the same.
Yes, you allocate separately. The
Okay.
same way.
Okay.
So I will be sharing the assignment later. I think there was a question which was tested in November. November what? The last sitting other than that sitting part 1 it was November 2019, eh? Or November
2019, yes.
2019 or 2020? 2020.
The latest sitting was 2020. We had one sitting in 2020.
So that one sitting, I think there was a question in that one sitting. So we will check on that anyway. So for now, this is what we are supposed to know in this topic concerning impairment of non-current assets, whereby we have a single asset and a multiple assets. So it was a nice session for today. I think we have covered the better part. So we can mark the end of today's class. So we meet next time. So that we will be introducing now the major topics, the bigger ones. Not even these ones are major because they are again in the syllabus. So when we meet next time, I will be starting now.
We call them the elephants.
We call them?
The elephant topics.
No, they are not the elephant topics. They're just the same way. You will be understanding the same way, the same thing we have done. Like now, earnings per share. So I will do earnings per share. And I will do reconstruction and the cash flow. Then I will finish with the group accounting.
Group.
Yes.
Group, is it the same? Like, okay.
So guys, you are welcome to subscribe to this class. So that was one of my students from the South Sudan region. So we always have classes like now. This one is happening in an early morning. That is from 5 a.m. to 7:30 there, whereby you can do this and go to your job area. So welcome to my Zoom classes. And at the same time, these videos I upload, some of them I upload to my YouTube channel. So remember to subscribe and click the notification button. So thank you and have a nice time.